I will call the meeting to order. And our first order of business today is to approve the minutes of the meeting of April 9th, 2020. I have a motion and a second. All in favor, we're going to have to record your vote.
You might have to hit the escape
I'm not
button
getting anything.
to minimize your Zoom so that you can see your PrimeGov window.
Oh, there it is. I see it.
Well, I'm having problems.
Are you able to see the voting screen?
No, I'm not. I have the live meeting and the agenda up, and I saw the motion and the approval, but I don't have any buttons to vote.
Yeah, that makes two of us.
Well, they're very, very light. It says yay, nay, or abstain, but it's not like a toggle button that you would normally see. It's just a circle on your screen, or at least it should be.
I don't see anything. Where is it supposed to be? Is it under motion to approve? Center, left, right?
You got it, perfect.
Okay.
I believe you're looking at the Zoom page.
Okay.
If you'll make sure that you're going to your Chrome window, your Chrome browser, and you should be able to see it under that.
Okay, I can't seem to make this window smaller.
Okay, if you'll hit the escape button on your keyboard,
There we go.
is it there now?
Yes, thank you.
Perfect. Jacqueline, are you okay?
Got it, found it. Yep.
Okay.
Okay, it appears that the motion has passed unanimously. Item number 3 on our agenda is to receive the election report. Apparently, I did not receive any challengers. So Chair will entertain a motion on item 3. I have a motion and a second on item 3. Please record your vote. Item 3 has passed unanimously. Item 4 is the consent docket. We have one item. Have a motion and a second on item 4. Please record your vote. Item 4 passes unanimous. Item 5 is to ratify approvals. We can take these all with one motion. I have a motion and a second on item 5. Please record your vote. Everybody voted on item 5?
Regina hasn't voted yet. Regina? Regina, can you unmute yourself, please?
Be careful what you ask for.
Okay, there we go. Item 5 passes unanimously. Item 6 is to approve the claims docket. I have a motion and a second on item 6. Please record your vote. Item 6 passes unanimously. Item number 7 is to approve the following applications for service retirements. We have several. I have a motion and a second on item 7. Please record your vote. Item 7 passes unanimously. Item 8 is to receive the report of death, authorize payment of the $5,000 death benefit, and approve continuation of pension to spouse. I have a motion and a second on item 8. Please record your vote. Item 8 passes unanimously. Item 9 is to receive the report of death, authorize payment of the $5,000 death benefit, and authorize the secretary to make necessary changes to conform on the following. I have a motion and a second on item 9. All in favor? Passed unanimously. Item number 10 is to receive a presentation from Kevin Jones or his representative concerning his application for a disability not in the line of duty allowance as permitted under the disability allowance provisions of section 40-106 of the Oklahoma City Municipal Code 2010 as amended.
Mr. Chairman,
Yes.
I do not believe that we'll need to go into executive session on this item. I tried to visit with each of the trustees separately and independently to go over the medical reports of that we've received on these individuals. And based on that, my review and Renee's review of the medical records and the disability that they're claiming in the case of Kevin Jones, we believe that the board should approve the not in the line of duty disability as laid out in item part C of this, consider for approval.
Okay, does anyone have any questions for Wiley on this item? Hearing none, Chair will entertain a motion. I have a motion and a second on item 10. Please record your vote. Item 10 passes unanimously. Item number 11 is to receive a presentation from Devin Slamp or his representative concerning his application for a disability not in the line of duty allowance as permitted under the disability allowance provisions of sections 40-106 of the Oklahoma City Municipal Code 2010 as amended.
Mr. Chairman, again, this is Wiley Williams, Deputy City Attorney, and we will not need an executive session on this item either. As I advised each of you independently, the medical records support that Mr. Slim is 100% disabled from the injuries he sustained, and that isn't more than likely. The board makes the decision, but it's our recommendation that he has a disability not in the line of duty and it's entitled to be awarded that.
Okay, thank you, Wiley. Does anyone have any additional questions? Hearing none, Chair will entertain a motion. I have a motion and a second on item 11. Please record your vote. Item 11 passes unanimously. Item 12 is to approve the request of the following to terminate vested rights and commence retirement benefits. I have a motion and a second on item 12. Please cast your vote. Item 12 is approved unanimously. Item 13 is items for individual consideration. We have one item. Item A is authorized termination of Pacific Hedge Strategies Fund and liquidation of funds effective September 30, 2020. Jason, would you like to
Sure.
comment on this?
You may recall we began to go down the path of identifying what we describe as a liquid absolute return fund replacement for PAMCO, which is a diversified absolute return hedge fund of funds that you've been in. We intended to interview candidate managers at the March meeting. We've put that on hold for now. However, we intend to proceed with this, or our recommendation would be to continue to proceed with this transition in the portfolio. The PAMCO fund of funds that you're in has quarterly redemptions, only allows for quarterly redemptions with 90 days notice. Therefore, notice would need to be provided to them prior to June 30 to get in the September 30 redemption. Further, it's going to take some time. They're not going to, because of the less liquid nature of the strategies in which they're invested, all of the money will not come back at the end of September. It will likely take several months for that to fully liquidate. So we're going to have plenty of time to identify the replacement manager. So really, this is an administrative, operational issue that just felt that needed to be addressed to further what was planned with the replacement for PAMCO.
Okay, does anyone have any questions for Jason on item number 13A? Hearing none, Chair will entertain a motion. I have a motion and a second on item 13A. Please record your vote. Item 13A passes unanimously. Item 14 is the investment consultant report.
Okay, thank you. Can everybody, I assume everybody can hear me okay.
Yes.
Take it off mute. So as we embark, I guess, on our second remote meeting, things, I probably mentioned this last time, but we're all recognizing how well our business continuity plans and remote working from home plans have been executed. Really, we continue to see no hiccups in our ability to monitor client portfolios, communicate with managers, and get client reports out to you all. Certainly, the most challenging thing is not being able to meet in person. Is something that we're certainly looking forward to doing sooner rather than later. That said, you all should have received the April flash report. While we did see a pretty big rebound in equity markets in the month of April that I think we talked about at the April meeting, that we were seeing even early in the month, you made up quite a bit of ground from where you were in March. Just to reset in terms of values where we are, 2019 was a outstanding year in the equity markets in your portfolio. I think the overall portfolio at the end of the calendar year 2019 was at an all-time high at just a little under 800 million, at 794 million. It's important we go back and just look at where you were at the end of 18. December of 18 was, or the calendar year 2018 was somewhat of a challenging period. Portfolio was down slightly. You ended 2018 at 683 million. And I mentioned that, and I know I mentioned it last month, just to indicate where we are today at the end of April actually is still a fairly reasonable increase and gain from where you were at the end of 2018. At the end of April, with the bounce back in equities and some fixed income sectors, high yield and non-US, the portfolio stood at 730 million in market value. Taking out the approximately 31 million that was used for benefit payments in operations, on a return basis, down about 20 million from the peak, from where you were at the end of 2019, but up significantly from the end of 2018. That's not to say that things are in good shape. We continue to be pretty cautious as to where with our outlook. I'd say at the end of last month, we were looking at certain equities and saying that things were potentially at fair value, not necessarily undervalued or overvalued. Today, at least prior to this week, our outlook for most equity asset classes was that they were overvalued relative to the more recent historical average values. As we saw valuations run up significantly in the month of April, with still quite a bit of uncertainty around earnings. So while prices were up, that the denominator in that equation, the PE equation, the earnings, a lot of uncertainty around that, tied to where we are in terms of the economy opening up. So that said, we continue to want to be cautious in how portfolios are deployed, really getting to targets where we can, re-risking to equity targets, but not overweighting equities necessarily, and also being thoughtful about ongoing cash needs. You may recall the commodities allocation was eliminated prior to all of this from your strategic allocation. That money came back about 20 million at the end of February. It's earmarked in the strategic allocation to be reallocated to real estate, your core and opportunistic real estate. A small amount of that was called, about 2.5 million of the 10 million of the 9 million committed to Morgan Stanley Prime Property Fund was called. But it's going to take some time for those real estate funds to call that capital down, as opportunities for them to put capital to work right now are pretty limited, and they're being fairly cautious. So as you look at the April 30 report, overall, the allocation to equities is pretty much on target. You're about 0.5% above the overall target weight. Most of the overweight is within large cap US, which continues to outperform other asset classes. Your small cap US is slightly overweight. Long short equity, which has been a real positive in this period, protecting quite a bit in the month of February and March. And so on a trailing 1 year basis has been very additive to the overall portfolio, right at targets. Private equity now, because the valuation hasn't adjusted like public markets, you're at your target there. A little bit underweight to international, and emerging markets is up effectively at your target weight. Fixed income overall is slightly overweight. The big underweight is in real estate. are real assets, and it's just going to take some time. And coming into this, you were underweight real assets. We took money from commodities, and we're still trying to get that to work. That said, we're comfortable with how you're positioned. You'll note there's a fairly large cash position of 13.6 million. We talked about this last month. This is that money that came back from commodities. There's still about 7.5 million of that is an outstanding commitments expected to be called, probably not prior to the end of June from the real estate funds, but it could be. And then that's sufficient for 2 to 3 months of your cash flow needs. So at this point, rather than having to put it to work and then sell to raise money for your operating needs, we're comfortable just holding that in cash and being a little bit more cautious and conservative in allocating. It's still less than 2% of your overall assets. So comfortable with where things are allocated today. Just looking at the performance for the month, as I mentioned, asset values were up. That equated to about a little over a 6.5% return for the month of April. Year to date now, that brings the portfolio still a negative return on a calendar year to date, down about 7%, ahead of the policy index, which is down a little bit more than 7%. Overall, your equity strategies have protected, for the most part. Small cap on a year-to-date basis, while down, it's protected by about 6%, down 6% less than the overall small cap market. Long short equity, as I mentioned, the hedged equity, the Mauna Kea platform, really providing pretty significant protection, down less than 3% versus the global equity benchmark, which is down almost 13% for the year. Your international developed managers, Harding Loevner and Lazard, down about 16%. That's less than the international markets. Harding Loevner on the growth side has protected quite a bit. A little bit more challenging for Lazard, a value orientation. Value has really struggled. The value strategies and the value sectors dominated by energy and financials has been a pretty big headwind. Wouldn't consider Lazard to be a deep value manager, more relative value, but certainly lagged a bit in this period. Just to put that, how dramatic that is on a 1-year basis through yesterday, the difference between domestically between growth and value is about 30% differential. The Russell 1000 growth index is up 16%. The Russell 1000 value, large cap US value, down 13% on a trailing 1 year. So about a 30% differential. So what has worked primarily domestically is big technology. The FANG stocks plus Microsoft, so Facebook, Apple, Amazon, Netflix, Google, and Microsoft, recently made up for over 20% of the S&P 500, which I don't think that limited amount of companies has made up that large a percentage of the benchmark in some time. So certainly benefiting from this stay-at-home economy of recently, and how people are operating, but that's a pretty significant run up in valuation. Value stocks and value strategies, traditional value metrics and the sectors within value, as mentioned, energy and financials, certainly hurt by oil and by how low rates are. So one of the things we're really drilling down and talking to managers, certainly not capitulating on value. We've seen this before in the late 90s and saw what happened following that, but certainly the sustained low rates have been an impact. On the small cap side, your manager, Ernest Partners, which has a value orientation, they've done very well because while they do focus on value, they do have a quality earnings component to them that has allowed them to fare fairly well. While the equities have done very well relative to the long only benchmarks, fixed income, just how you're positioned. I know we talk about this quite a bit, but it's important to note the fixed income relative to what we're comparing to has struggled on a mark-to-market basis. We don't believe there's significant permanent impairment in these portfolios, but we're comparing all of your fixed income allocation to a benchmark that is predominantly U.S. Treasuries and agencies, which is highly sensitive to the direction in rates. So it's not just been calendar year 2020 where we've seen Treasury yields plummet to about 10-year Treasury today is at about 65 basis points. Really, 2019, we saw Treasury yields go down dramatically from about 3% at the end of 18 to 1.5% or so at the end of 2019. As those rates came down, the value of core bonds or the aggregate index went up. Other fixed income sectors, high yield, emerging market debt, and some of the things that you have within your fixed income portfolio, particularly the Brandywine non-US and the PAMCO strategy, not nearly the sensitivity to interest rates. Going forward, the rationale for how your fixed income portfolio has been positioned as a investor with long-term liabilities where you need, and I know you've been recognizing the expectation for muted returns by lowering your return assumption, you still have a long-term return assumption in the 7% range. If we look at fixed income and U.S. Investment grade bonds, particularly treasuries and agencies now with a yield of less than 1%, makes it pretty challenging to have a significant allocation to bonds and with a long-term expectation of getting that 7%. Short of just taking on equity market risk, we think it's important to maintain bonds in your portfolio. The high yield, non-US sovereign debt within Brandywine and what we're looking to add as a replacement to PAMCO in the liquid absolute return sectors just provide strategies with more dynamic ability to navigate fixed income markets. The case for that is even more compelling today from a return standpoint in terms of the opportunity going forward to invest in securities that have a higher yield going forward, particularly with treasury yields at 50 basis points. So the dispersion relative to your policy index, while pronounced, it's not unexpected. Fortunately, the equities really provided a lot of protection in this period. So going forward, I think where we are today, we want to push ahead, and I know the environment we're in, not meeting personally, does have some impediments to that, but we do want to push ahead with things that were on the agenda, particularly the liquid absolute return. As I think I mentioned last month, we do anticipate activity picking up within private markets, within the private equity component. You've made a couple of recent commitments to Francisco Partners, a technology-oriented growth equity fund, Firstmark last year, which is an early stage venture capital fund, and then the Warburg, Pincus, and Apollo funds in 2019. We think the activity is going to be picking up in these as prices have come down dramatically. We're looking carefully right now at some new opportunities within the distress space. This is an area that you made fairly significant commitments to in 2009. Your earliest private equity commitments were to some distress strategies that really perform very well. The Sigler Guff Distressed Opportunities Fund that you committed to in 2009 has delivered about, for every dollar you've invested, about $1.60 back to you, and there's still some embedded value there. But strategies like that that we're in the late stages of due diligence on, that have come to market and we think are going to be pretty compelling, probably have some recommendations for you in the next at the June or July meeting there to continue building out your private equity portfolio. Continue to have regular calls with your managers, making sure things are running smoothly and overseeing portfolios as normal. Again, any questions? I covered a lot.
None here.
Looking forward to getting back to seeing you in person. I know there in Oklahoma, you're a little bit further ahead of us, while Missouri had our governor has lifted stay-at-home orders. St. Louis County and St. Louis City, where our offices are still under the pretty significant stay-at-home restrictions. So not sure where we are with respect to getting our folks back in the office. It's probably not looking like until at least mid-June, which is probably impacting our travel as well. I know my wife's ready for me to get back on the road, so I'm looking forward to that as well.
Okay, does anyone have any questions for Jason?
Jake, you had mentioned building out those private equity investments. Would that be just from money that we've received in returns from those investments previously, or?
Yeah, so you have a 5% target to private equity, and you're just a little bit under that today in terms of invested value. But we know that money is going to continue to come back over time. So you have to continue to make commitments. We'll be thoughtful in that pacing of what can be put to work, because you have today you have $35 million in invested value and roughly the same amount in unfunded commitments, some of that unfunded commitment is going back to the earliest funds from 2009 that probably won't be called. So maybe about 34 million in unfunded commitments, which we would expect to be put to work over the next 3 to 5 years. So you really need to continue to put capital, make commitments to be invested those commitments are really to fund investments over the next 3 to 5 years. It won't all go to work at one point in time.
Okay. Thank you.
Anyone else? Okay. Thank you, Jason.
Thank you.
Okay, next item on the agenda is item 15, comments from board, staff, and citizens.
Congratulations, Paul.
Well, thank you very much. It was a difficult campaign.
I appreciate it.
I have one item to report out to the board. On April the 30th, we conducted what's called an oral review board, and we interviewed 5 applicants for the retirement system manager position. That process resulted in us coming up with 3 finalists, and as the chairman, I was authorized to select an ad hoc committee of board members, and I included Renee. And this afternoon, we are going to conduct second interviews with the 3 final candidates. So I'm very hopeful that within the next couple weeks, at the very latest, we will have made a selection, and we can have that on the agenda for June.
Paul, are we gonna go ahead and fill that third position while we're at it?
Well,
Make it one?
at some point, I think, that we can discuss that. Obviously, what would be my preference would be to go ahead and get the new manager on board and get them fully trained by the time Renee leaves us in September. And then at that time, we can entertain thoughts of perhaps advertising and filling that retirement system specialist position, which is the one that's in the middle. So,
Sounds good.
okay. Does anybody else have anything? Okay, I'd like to thank everybody for fighting the technology and being able to join us. And with that, we are adjourned at 10:42.